Thank you for joining me this Friday, the 15th of December, for the last Builder-Ranked Weekly Wrap for 2023. I'm Grady, market analyst with Builder-Ranked. What a year it's been, and what a brighter year 2024 is shaping up to be, with the prospect of 3 interest rate cuts out of the Fed announced just this week, while the RBA may wait until later next year to reduce our local cash rate. So what else is making 2024 look so bright, and where are the key opportunities for investors to reposition their portfolios heading into the new year? Firstly, considering sectors that have pulled back in 2023 is a great place to start. Healthcare is a sector that has outperformed the market over the last 10 years, but experienced a pullback over 1.5% in 2023, and that's due to companies shifting focus away from COVID-19 and back into clinical trials and treatments they were working on prior to the pandemic, thus slowing income and growth outlook for the short term. However, in saying that, some companies in the healthcare sector that are already making money were caught up in the healthcare sell-off and present as key investment opportunities for 2024. Bell Potter has included Clinuvel Pharmaceuticals, a distributor of the world's only approved drug for the treatment of the rare skin condition EPP, and Telix Pharmaceuticals, the company behind the prostate cancer imaging agent Illuccix, as buy ratings in the analyst outlook and stock picks for December 2023. With the outlook for gold remaining very bright heading into 2024, according to our analysts, fund managers and the markets in general, Bell Potter has included Regis Resources as its strong buy rating for December 2023. Regis is the 4th largest ASX-listed gold producer with an all-Australian asset base and strong guidance heading into 2024. Expanding into the strategic materials space, Lynas Rare Earths has garnered a buy rating from Bell Potter after a turbulent year for the leading producer of rare earths, after its Malaysian operations ran into cracking and leaching bans that were eventually downgraded and operational challenges with the shift to operations in Kalgoorlie. The outlook for Lynas is strong though, with a trajectory towards doubling capacity over the next 3 years via the expansion of their mining and concentrating capacity at Mount Weld, which is complemented by the recent recovery in the price of NdPr to $70 per kilo. Corporate Travel Management has recently been added to the Bell Potter analyst coverage list, attracting a buy rating for its growth outlook and market-leading position as the corporate travel market continues to recover, especially in the wake of CTD having already exceeded pre-pandemic total transaction value, driven by new client wins. Of course, the retailers have surprised the market in 2023, with the sector jumping 14.26% throughout the year, despite rising interest rates hiking the cost of living for all Australians. Bell Potter is bullish on leading global online luxury personal goods retailing platform at Cettire and Accent Group, which boasts a 30% market share in the $3 billion Australian footwear retailing market. What you'll notice about these two companies is that they target a very specific market. Accent specialises in footwear and targets a younger demographic, which isn't impacted by cost of living pressures, while Cettire targets luxury retail, which has seen modest growth in 2023, especially in markets like China. Now, a few months ago, there was speculation of a recession in the US, and that could lead to a downturn in markets heading into the new year. But now, among the current Santa rally, the outlook in 2024 is for a soft landing both locally and in the US, and a market rally heading into 2024. Locally, from Monday to Thursday, the ASX 200 rose 2.54% in a very strong week, buoyed by Wall Street hitting a 52-week high for the Nasdaq and S&P500, while the Dow Jones hit an all-time record high over 37,000 points after economic data showed inflation easing in the US, and the Fed, of course, signalled rate cuts on the horizon in 2024. The ASX took strong lead from Wall Street this week, with rate-sensitive sectors leading the gains, including the REIT sector rising 5.82%, while tech stocks jumped 4.9%. The winning stocks on the ASX 200 over the week were Charter Hall adding 13.21%, Credit Corp Group rallying 11.52%, and Telix Pharmaceuticals climbing 11.38%. On the losing end, IDP Education tumbled 11.33%, Bellevue Gold lost 6.9%, and Nickel Industries fell 6.3%. On the broader market, the All Ords rose 2.6 0.62%, led by Tamboran rocketing 40.74%, Sigma Healthcare soaring 40.65% after agreeing to a transformational merger with Chemist Warehouse, and Bought Longyear Group added 27.24%. The most traded stocks by Bell Direct clients over the 4 trading days were Fortescue Metals Group, ANZ, Endeavour Group, CBA, Origin Holdings, Lendlease Group, Linus Rare Earths, Boss Energy and Woolworths Group. Clients also bought into Treasury Wine Estates this week. The most traded ETFs by Bell Direct clients this week were led by Vanguard Australian Shares Index ETF, Beta Shares Geared Australian Equity Hedge Fund and Beta Shares Australia 200 ETF. On the economic calendar for next week, the latest meeting minutes out of the RBA will be released on Tuesday, which will provide investors with an insight into the rate outlook locally over the coming months. Especially any signals for rate cuts on the horizon will be very welcome by investors and Australians alike. Overseas, the Bank of Japan's interest rate decision is out on Tuesday, with the expectation that the minus 0.1% rate will be maintained for yet another month. Key US data is also out next week, with building permits, personal income spend and GDP growth rate data out for Q3 later in the week. And that's all we have time for today and this year. We'll be back with our market commentary from the week commencing at 15th of January 2024. I'm Grady Wolf, and from all of us at Bell Direct, we hope you have a safe and wonderful Christmas and the happiest of New Years.